Okay, I wanted to do a real quick update. So because of what's happening in the market, I usually don't post because there's really nothing to do until IB rank gets above 50, which is what I've been preaching all along. Take a look at what I posted, I think on Friday. Where is it? Right here. Over the last 5 years, IB rank of 100% in the SPY has only lasted 3 days at the most. From there, IB rank started to retreat. Today was day one. That was the 21st. So the 21st of August was Friday, okay? So we've got at least 2 more days of high vol. But how do I know that? I don't know that. But what I want to do is I want to explain this chart real quick. When you listen to Tom and Tony on at Tasty Trade, and we talk about reversion to the mean, I'm not talking about price. There's nothing that says that price has to revert back to the mean. Okay? What we're talking about is volatility has to revert back to the mean. So here's what I mean. Okay? Here's the SPY. I'm loading up the last 5-year chart. I'm going to zoom out down here. Okay? Let me zoom out real quick. How do I? Oops. Let me just, so I can deal with you. Okay, here we go. So what I want to do is I want to zoom out the last 5 years here, okay? If I can. So if you look, what I mean about volatility reverting to the mean. Oh, I got a better chart. The VIX. I'm sorry. Let's put in your chart here. I'm gonna type in VIX. Okay. So, and this is the last 5 years. Well, in fact, I'm gonna go back 10 so you can see because it'll be a lot easier to see. I'm gonna go like this. I'm gonna go to 10 years. Then I'm gonna zoom out down here. All right. So then I'm gonna grab this chart right here. I'm gonna pull it out. Okay. So this is going back 10 years, but you can see, look, VIX was at a high of $89.53. This is back in 2008. Remember when the market crashed? But if you go and start from 2009, which is right around here, okay, the high is right around here is around what? $47.52, right? Let's say 48. But if you look from 2009 on, you see how VIX has just been dropping and dropping and dropping. It looks big because of the scale here, but look at the price. See, $48. It's been trending down. So for volatility to normalize, the VIX has to shoot and stay above 48. You see what I mean? To bring volatility back to its norm. Okay, so that doesn't mean the market's going to keep on dropping forever. That just means there's volatility. That means the market could be up one day for 2 days and then down the next day for 2 days. So that's what they mean by a back and forth market. As traders, that's what we like. Okay, because we can sell premium when IB rank jumps higher, and then 2 days later it drops. We're taking off profits already. But for volatility to go back to its norm or revert to its means, the VIX, okay, the VIX has to hover. See, look, it's been at like, look where it's been averaging. If you draw a line right through around here, it's been averaging around like 14 or 15, right? So for it to get back to its mean, the volatility has to stay high to bring that average back up. All right, that's what we talking about, revert to the mean. So when I go back to SPY right here, for those of you who have positions on, okay, here's why you have to be very careful. I'm gonna go back to SPY, and I'm gonna see if I can zoom in here for the last 5 years. So, well, it doesn't matter. I'll just do this. I'll zoom in real quick to make it easier. Hold on. Okay, so see, oh man, this is October of when? Yeah, this is October of 2014. Okay, look what happened in October of 2014. This is a really good way for me to show you this. As you can see, the market dropped about 8%, almost 10% in a span of a month. Okay, from right around here, which was I don't know, what is that? Expiration is 9/15/2000. So right around here, and I'll zoom in, see right here. I'm going to zoom in to right about here. Okay. All right, so take a look. Right around here, which is September 19th. In a span of one expiration period, look, it went from the SPY went from about 201, dropped all the way down here. Okay, so it's about, what is that, a 10% drop almost? Okay, in a span of 30 days. Okay, but you notice IV rank didn't get to 50 till halfway through, right? So the optimal strategy is you wait for IV rank to get above 50, and then you start putting on your golden geckos. Okay, now that position would have moved against you, right? Now, remember now, if you're starting a position here, your expiration period is not here. Your expiration period is here, right? Because 45 to 50 days away, right? So you go over here. Even if your position moved against you, you probably wouldn't have done anything. Why? Because, in fact, you probably would have scaled in, right? You put on a contract here, 50. If it gets to 60%, you're putting on more, or 70% more, and it got to, if you can see right here, it got to 100%, dropped after one day, got back to 100%, and IV rank dropped the next day. Okay, so as you can see here, you're going to be losing money when you first place these positions on. Why? Because volatility is going against you. Okay, because if you start at 50%. Now, same thing over here. See, if you zoom in here last week, Monday, Tuesday, IV rank got to 50% on the 20th. That was Thursday. Okay, and one day later shot up to 100%. So of course, if you put on position on Friday, on Thursday, Friday your position is going against you P&L wise, right? Because volatility shot up. Okay, but at 100%, you're supposed to be putting on more positions. That's the concept. Now go back to October, right? Your position works against you, right? You can manage them if you want, roll them further out or whatever you want, or bring your call sides in, and you would have got slingshot actually. Well, you could have taken profits, I guess, but on the call side, I mean. But look what happened. Okay, look where IV rank got to 50 on October 1st. Well, no, I'm sorry. It got September 29th. IV rank got to 50 the first time last year. All right, and you're right here. Okay, I don't know, right around 196. 30 days later, you're right back up to where you started, right? If you take this line and go across. And remember now, where's your expiration? Now remember now, the golden go on average, you're gonna hold your position about 19 trading days before you can take about 50% of your max profit on average. So you pretty much would have been all out at 50% or at least 25% of max profits before this expiration date. Look how long IV rank stayed at 100%. Okay, so I'm not talking about price. When I say revert to the mean, there is nothing that's saying price has to revert to its means. What I'm saying is IV or volatility will revert to its means. For that to happen, IV rank has to stay above high. That doesn't mean it's going to stay at 100% all the way. I'm just saying that gives you trading opportunity. Now, if I scroll out and I zoom out real quick, okay, this is on the SPY. I'm going out 10 years. And I'll go back to 2000, which is around, yeah, right around 12. Well, okay. Anyway, in the last 5 years, look up this green line right here is IV rank at 50. Of course, here is at 100. Count how many times it's been up there in the last 5 years. I think it was only like 5 times or 3 times. 1, 2, 3. Today's the 4th time. If I go back to, if I scroll out here a little bit, 2005. So we want to go to here we go, 2011. We're going to go back to 2010. 12. Sorry, my computer's hella slow. Okay, here, 2010. Once. Yeah, I think about 5 times. Okay, and each time it only stayed up there. Look how long. Here, this is back in 2011 right here. Okay, This is, yep, 2011. IB rank got 100. It didn't stay up there. Okay, so perfect. This right here is what I think will start to happen for the VIX or volatility go back to normal. You're gonna have to see like an SPY, IB rank hovering, going back and forth to 150, 150, 100, this range. So you can, you can trade when IB ranks above 50, it'll shoot back up, and you can trade and IB rank will drop down. Okay, like this. Why? And I don't expect this part here. It's got to stay kind of like above like this. Why? Why? That's the only way. That's the way for the. That means the VIX is hovering above its norm for it to bring the VIX, for it to revert back to its mean, which is a little bit higher up. There has to be a lot more volatility for a longer period of time. So I see a market like this. Okay, up, down, up, down, up, down, which is good for you because when you put on your go and get good, you're going to be taking them off in like 10, 15 days for 50% of max profit. Okay, so that's what I mean. Now, you should, for those of you who are now, oh, by the way, now you know why I like waiting for IB rank to get above 50. Okay, because IB rank can go to 100 very quickly, like in one day. And that's when your size stays small and you scale in. Now, this will be more than a 1 standard deviation move. Okay, so you're going to be underwater for a little bit. Okay, and this right here is really important because if you look on your toss chart, you'll see the probability of touching is about 98%. On almost every trade you have a good high chance of your trades being tested, okay, or your short put calls or your short call size getting touched. All right, but this is why this works over the long term. All right, look, if you're here, I'm zoomed in here you hit 50%, right? And like I said, 929.30, IB rank hit 50% right here. Boom, market drop, but not one day, of course, not like this past day. But look, over time it worked. The position kept on working against you. Okay, now you could have adjusted and brought your call side in, okay, and then just hold on for and you could have even rolled. But remember now, if you're selling something here, your expiration date is not here. Your expiration date was in November. See, so look what happened. Okay, so you would have been tested only for half the time, right? Because as soon as it got back up to here, you're fine. You're not betting it'll be higher than this because you're placing your bets here. So in Dole, it'll look something like this, right? Look, IB rank at 100. If you go to strategies, you go to Iron Condor. This was your default. You can set this to whatever. I think Karen has 56 days, but you can put it at 45 days because that's what tasty. Take out the weeklies. You can go 1 standard deviation. Five strikes wide has been the most effective return on capital according to Tasty Trades market measure. Here's what you look like as of Friday. This doesn't include today's drop. Maybe it does. 197. Let me look. What are we trading at right now? 190. Yeah, this is as of Friday. If I go into after hours, what are we showing here? Oh no, maybe this does include. Wrong chart. Sorry. 197. It closed at 197 on Friday. And look, we're at KC. And I'll zoom in. This is a 15-minute chart, so you can see after hours stuff. Okay, this is a 15-minute chart. So every one of these bars at 15 minutes. So we closed on Friday right about 197.80 something. Okay, right on here. But overnight, meaning pre-market. So after the market closed on Friday or here, especially pre-market Monday, which is right here, the market just dropped. Okay, it went to down 189.95. It's low. Now, going back to the Dow chart, 189 is down here. Okay, so on Friday was here, and it's here now. Now you see this brown area right here? That's the expected move of the SPY between now, today, and the expiration period, which is in 53 days. Okay, in your settings tab right here, that's how you can see it by show range. I have it checked. Okay, I only have about 30 seconds, so let me just cover this real quick and I'll do another one. But anyway, you see what I mean? This position could move against you. VIX will rise, but you should still be in the game, especially when you're putting on positions now with IB rank at 100 instead of when IB ranks at 35. and that's how you can protect yourself. Hope this helps. You guys, good luck trading, and I'll talk to you guys soon.